Get on up in here. We're gonna have a wonderful live today, and I'm having this live today because every time I log on to social media, there are these particular groups of people who get on here and tell people to buy term, right? Buy term insurance and invest the difference. There are these group of people who get on here and tell people to buy term insurance and invest the difference. So today I want to go over, not only go over, I want to rebuke this suggestion, right? I want to rebuke this suggestion because I think it will end up defeating a lot of people, right? If you're watching this live today, I want to know if you have ever had got into a run-in or ever ran across these people who suggest you buy term and invest the difference, right? I want to know if you've ever run across these group of people who tell you to buy term and invest the difference. Right? Listen, I've been around now for 18 years in this business. And I've heard this terminology so many times where these people tell you to buy term and invest the difference. And what I'm going to go over today is the reason why this doesn't work. Right? Today, I'm going to challenge one of the most popular financial lies ever sold to middle class America. Because we know wealthy people do not buy term policies. We know wealthy people do not buy term policies. So when you have these group of people that get on social media and spew the rhetoric as to why cash value life insurance don't work, who spew the rhetoric as to why you should buy term insurance and invest the difference, I am here today to help you to defute this lie. Buy term and invest the difference sounds smart. It sounds responsible. It almost sounds logical. But how you doing? Hey James, how you doing? Welcome to the live. Yes, buy term. Yes, James, I can help you. Hey, listen, let me give you my number. Text me 443-208-5480. That's 443-208-5480. Text me and let me know what you're looking for, and I'll get with you. Yes, so you have these companies who get on here and tell you to buy term and invest the difference. Again, it sounds smart, it sounds responsible, It sounds almost logical. But what nobody tell you is this. The strategy only works if everything in your life goes perfectly. That strategy only works if everything in your life goes perfectly. Listen, if this is your first time running across my channel, right? I've been in the financial service field now for the past 18 years or so. My main objective or my niche is helping people to protect themselves, but also helping people retire tax-free. So if it's your first time running across my channel, please subscribe if you're getting value out of what you're about to hear, what you're hearing today. And also hit the like button if you like what you heard today, because it helps the algorithm push it out. And also share with people. As a matter of fact, hey, if you're watching this live, invite people on this live right now who may need to hear this. Because you have these people out here who are pushing an agenda. And I personally believe that they are hurting middle America with the idea of buying term and investing the difference. Okay? Again, it sounds like a smart idea. It sounds responsible. It sounds almost logical. But again, what they won't tell you is this. That strategy only works if everything in your life goes perfectly. So let me explain what I mean. The idea behind it is this. You buy a term policy from this company, and supposedly they put you in some kind of investment. And you invest with them, and supposedly 30 years from now, you should be financially wealthy, or what they would say self-insured. Which to me is crazy, because wealthy people still carry life insurance. And they're wealthy. So in my mind, a wealthy people will be considered self-insured, correct? So why do they carry life insurance? But life doesn't work out perfectly. And that's what wealthy people understand. Like, life doesn't work out the way you plan in most cases. And that's really what life insurance is. Life insurance is there just in case your plan doesn't work out the way you planned it. Right? If you own a term policy right now, or you used to, type term in the chat. I want to talk to you. If you own a term policy, or you used to own a term policy, type term in the chat. I want to know who I'm talking to right now. Right? What buy term and invest the difference promises is this. You buy a cheap term, which with their company is not even cheap at all. So again, if you are a client with this company, DM me. Let's sit down and let's do a review. I'm almost 99% sure that I can get you a cheaper term policy if that's what you want. Okay? But this is their strategy, is you buy a cheap term policy, you take the money you didn't spend, and you invest it, build wealth, and you're supposed to be self-insured later. That is the plan. Right? Again, on paper, it sounds perfect. On paper, it sounds perfect. I'm 48 years old. I've been living long enough to know that sometimes things don't work out the way you plan. As a matter of fact, the average retirement savings right now in the United States of America is $183,000. There is nothing wealthy about that. And again, if you remove the millionaires from their retirement savings, the multi six-figure earners from their retirement savings, if you remove them, because they are the ones that contribute the most, if you remove them from that stat, I'm almost willing to bet that the true number for the average retirement savings is no more than $68,000 to $70,000. So again, it sounds perfect on paper, but strategies don't live on paper. People live in the real world. Okay? I want you guys, if you have an agent who is from this company, I want you to invite them on this live. If you know people that have policies from this buy term and invest the difference company, I want you to invite them on this live. Okay? And if you yourself have a term policy, especially if you have one from this particular company, I want you to type in the chat term. Right? Because again, that strategy in real life, real time, doesn't work. It doesn't work. The first problem with that strategy is this. Most people don't invest the difference. Let's be honest tonight. Let's be honest tonight. Most people don't invest the difference. They spend the difference. I've been around long enough in this industry. I haven't met, I'm lying. I met one person. No, two. I met two ladies who actually invest the difference. But you want to take a wild guess as to how much they were investing? $50. I met a lady who had their policy with them for 20 years. And on the investment side, had less than $2,000 in 20 years. Right? Right? The strategy does not work. Most people don't invest the difference. They spend the difference. That money goes to rent. It goes to kids. It goes to car notes. It goes to vacations. It goes to emergencies and or lifestyle inflation. And if you don't know what that is when people start to make extra money, they inflate their lifestyle. That's just simply what lifestyle inflation is. Right? And here's the deal. I will always ask these agents that put client into these plan. I said, let me ask you a question. What happened if a 35-year-old buys a term policy and they keep it for 30 years? And now they are 65 years old. And then their investment didn't pan out the way you said it should. What do you do then? I had one gentleman tell me, oh, then at that point, I talked to him about getting a new life insurance policy, and I'm like, at 65? Do you know how much that's going to cost that person at 65 years old for a new policy? Not only that, let's pray that that individual health is still the same. This is why I say that plan doesn't work. A lot of people who are on this live right now don't even know that their term policy expires. When you buy a term policy, whatever date, whatever year that you buy it for is when you no longer have it. You buy a 10-year policy, after 10 years, it's done. You buy a 20-year policy, after 20 years, it's done. You buy a 30-year policy, after 30 years, it expires. And there is no investment account big enough to replace your life insurance, at least based on the numbers that we're seeing right now. Their strategy relies on a perfect discipline for 30 years. It's a fantasy. It's not a plan. Again, the average retirement savings right now in America is $183,000. So let me paint you guys a picture. This agent comes to the house and sells you on buying term and investing the difference. You're married, you have children, you have a mortgage, right? So you listen to this person. Then 30 years later, your investment with them, let's say, was $200,000. That is not enough to create generational wealth. So now, 30 years later, your life insurance is done. But the problem is that individual has had a heart attack maybe twice, or maybe had a stroke. Definitely within 30 years, they put on some size, some weight, right? And then you tackle on the fact that they're also 30 years older. So what do I mean? 35 years old, your $500,000 policy was $40, for example. 30 years later, the policy expired. You also didn't build wealth. Now that agent come back to you and want to get you a new policy at 65. Now that agent have to tell you that a $500,000 policy for you at 65 might be $800 and something a month. And you cannot afford it. So now what do? They shrink your insurance amount down to $50,000, which is the reason why most people are walking around here with $25,000 or $50,000 in life insurance, because they took this advice and they wasted 30 years of their life when they was young and could have paid for a whole life or a IUL at a reasonable cost. But these agents will tell you cash value life insurance is bad and you should get term and invest the difference. You're watching this today and you have one of these policies. I want you to message me and let's do a review. Again, worst case scenario. There's nothing wrong with term. Was it no cash value guy? Got you. There's nothing wrong with term. Every policy has its place. But what I will educate you on, Mr. No Cash Value Guy, is if I buy a term policy at 35 and I buy a 30-year term policy and it runs out on me after I'm still alive, I'm 65 years old, the so-called fantasy plan that they put together for me to be wealthy 30 years later, which we both know right now, why would it run out? Sir, all term policies have a time frame. After whatever time you buy, it becomes annually renewable. It's in the policy. Nobody's going to pay that price once it becomes renewable. And I'm glad he asked that question, because this is what clients don't ask, that question. After my time frame is over, what's my new premium going to be? I'm going to give an example. Last year, I had a client call me about their father. They had a policy, term policy from a particular company. 30 years. They got a letter from that company a few months before the policy was about to hit the 30-year. And he asked the question, how much is my new premium going to be? And for the same policy amount that he had, which is, I believe, about 300 and something K, was going to be from $67 to almost $400. And he got so furious. He said, the agent told me my policy was going to be forever. It doesn't run out. Just like this gentleman said, why would it run out? Well, if it didn't run out, why would the insurance company send him a letter saying, hey, call your agent because your policy is about to be renewable? And the client said, what does that mean? He called the insurance company and they gave him the new premium if he keeps that same insurance amount. Oh, along with that also, this gentleman is now diabetic with insulin. When he was in perfect health 30 years ago, perfect health, superhuman health 30 years ago. All right? And since we live in a reality world, because again, they tell you to buy term and invest the difference, and you should be wealthy 30 years later. Well, the data doesn't show that. The average retirement savings right now, whether it's an IRA, 401k, it doesn't matter, is roughly $183,000. That's the average. And again, that number is extremely skewed because if you remove the millionaires out of there, if you remove the $500,000 earner out of there, if you remove the multi-million-dollar individual out of there who are contributing the most into these plans, the true number is probably $68,000 to $70,000. Nobody can retire for it. This is the reason why everybody can't retire right now in America, because they don't have enough savings. So if these agents are going to tell people to buy term and to invest the difference, well, the difference isn't working. And now these people are walking around here without life insurance 30 years later because they can't afford the new premium. Or worst case scenario, their health has gotten so bad in 30 years, they can't even get coverage at all. So you're saying they will have more in a cash value. I'm saying a cash value policy is at least a permanent policy. Forget the savings side. I'm talking about at least I know that that policy will outlive me. You understand? So this is very concerning. And if you're watching this live, I will always tell you, if you run across one of these agents, please get a second or third or fourth opinion. Ask questions like, hey, What if the plan doesn't work out the way you say it should? What happens to me after 30 years? The average income in America right now is about $68,000 a year. So we know most people are not going to have enough money to invest and become wealthy. And that's a fact. So if that's the case, then the cash value life insurance, to me, at least I know that if something happens to me, my wife is going to be okay. If something happens to me, my grandkids at least have something. Right? So it's okay. No, I'm actually personally ignoring you, Mr. Cash Value, Mr. No Cash Value guy. Because and hey, Mr. No Cash Value guy, I have a question for you though. Okay, let's paint your picture. Let's paint a picture. I buy a 30-year policy. 30 years later, I have 500 grand in your IRA, which is what you guys usually offer people, or mutual funds or whatever. The question I want to know, okay, now I don't need insurance anymore, right? 30 years is done, boom. And I have $500,000 from you guys. Question, is that money, that 500 grand, is that money for me, or is it money for my family? Because if it's 500 grand, and I guess I'm probably going to be living off of that, let's say I live till 90. So I'm 65, I live till 90, and I end up exhausting most of that money to live off of. What happened to my wife? Because she's probably going to outlive me. What would I leave her? What would I leave my children or my grandchildren? Because the essence truly of life insurance is wealth transfer. Okay? This is the way the Rockefellers have done it. This is the way the wealthy have done it. I'm transferring this money over to my children and my grandchildren, so that way they can keep building upon it. So if I'm gonna if we're gonna play your game here, 30 years later, I don't need life insurance anymore because I should be self-insured. I got money or whatever. Is that money for me, or that money is for my family? In most cases, it's probably gonna be money for me to live off of. And if I live longer than I should, then my family gets nothing. At least with the cash value policy, they're gonna get something. They're gonna get something. So I'm glad you got on, Mr. No Cash Value guy. Okay? And I want to say this too, to the chat. How does it feel giving free money to the insurance company? Take out your phone right now. Take out your phone right now and Google what percentage of term policy pays out. It's 2%. 2% of term policies pays out. So you just gave your money to the insurance company. The insurance company know what they're doing. They know that if you buy a term, they probably in most cases will not be paying out. They know if you buy a term, there's a high likelihood you will outlive that policy. If you're 30 years old and you buy a 30-year term, you're probably going to be alive at 60. They know the data. The average male lives to 79, 81, somewhere around there. The average female, 85 to maybe 89. So they know. And they will take your money all day long. They would take your money all day long. Right? I'm so glad this gentleman got on this live. I'm so glad it got in this live. And listen, you too, Mr. No Cash Value, you seem cool too. This is not about any kind of animosity or anything like that. If your clients are term client, listen, I sell term too. I sell term too. I don't shove things down people's throat. If I walk into a home and I know this person cannot swing a permanent policy, I'm not going to offer them a permanent policy. But I will always give the clients the option. Hey, this is what term does. This is term. This is what the IUL does. And let the clients choose. It's called education. And this is the reason why I don't believe in working for one company or one company that just sell one thing, and I got to sell my client that one thing no matter if it works for them or not. I don't do that to my clients. I'm a broker. I work for many different companies. I got term clients. But every year I sit down with them and I re-educate them. Hey, you got your term policy. I don't want you to say nothing 10, 15 years from now when it runs out and you get a letter from the insurance company. I'm letting you know what it's going to do. Great. And we move on. You understand? So at the end of the day, my gripe with it, because I don't own a term policy. I got a permanent policy from day one. When I got into this business, I got a permanent policy. To me, it just made more sense. Like, I'm not about giving money away. I don't care if I build wealth later. I don't care if I invest in the IRA, which I do have some too. Okay, I got some stock options through the company. I got some deferred comp plan. I don't care. But I'm not about to give the insurance company free money that I can't get back. That's not gonna work for me. Okay, so to me, it just made sense when I got it. Okay, term is what? And after 30 years, what do I get back from? Nothing? No, I'm cool with that. Let's go to the other side. Let's go to the other side, right? So just so you guys know, when you're on this live, if you run across some of these agents, ask questions. Hey, listen, some of these guys are cool. If you like them as agents and you want to do business with them, great. But you want to be an educated consumer. You want to ask questions. Hey, what happens after 20 years or 30 years? What happened to my policy? And if the agent is honest, they'll let you know. Hey, well, you can either pay the new price annually because it's going to renew every single year, right? What do you do after their term for your client? What do you do after their term for your client? I don't understand that question, Mr. No Cash Value. Right. So I will let them know, hey, listen. This is the term. This is what it's going to do. And this is the IUL. This is what it's going to do. And then from there, you pick what's going to work best for you and your family at the end of the day. At the end of the day. And I also do a supplement. So for example, I don't know, Mr. No Cash Value, but think I have a thing against term. I don't. So I went into a home where a client needs $2 million in life insurance, but they can't swing the premium for a $2 million IUL. And I've written them $1 million IUL, and I supplement with a term, $2 million. And even with that term, it's also convertible at a later time. The clients you sell term policy, what do you do after the term ends? I don't wait for my client's term to end, because every year I do my annual review with my clients, and I say, hey, in your policy here, after year 20, this is what your new premium is going to be. Are you okay with this? And they'll let me know yes or no. And I see them again the following year, and I ask the same question. You understand? Because in everybody's situation is different. Some people may not have the money right now to do an IUL. I'm not gonna force an IUL down nobody's throat. I'm not so gung-ho IUL that I don't look at the client's need. Right? But every year I do my annual review, I will point out to them, because here's one thing I know about clients. They have short-term memory. Okay? Okay? They forgot what you told them. That's why I do my reviews every single, hey, you remember what we talked about, right? Okay, I'll see you next year. Hey, every single time. Every single time. So, what is enough for IUL? I don't understand that question. So listen, at the end of the day, your main job as the agent is to do what's best for your client. This is again why I don't work for companies that only offers one thing. There's no way one thing can fit every customer. It's impossible. Listen, this is the reason why car companies have many different options. Okay? Some people, Toyota sell a Corolla. They'll sell Camry. They sell Avalon. They sell trucks. They sell pickups. Okay? You understand? So when you work for one company, would it be cool if I come out? If not, it's still, I don't understand. Listen, so I work for a company, many different companies that offer many different things to my clients, right? Oh, you mean join the live? No, not today, sir. Today is all about me. Today is all about me. Next time I get on, I'll let you in. Because my job today is to, I don't want to go back and forth with any agent. I want to educate people. You understand? I want people to be able to make decisions. And when I see some of these agents who are going and bad mouthing cash value policies, IUL, it's very concerning to me, because I'm like, okay, great. If you don't like IULs, then go sell term policies to your term clients. Go find term clients that love term, and you sell them the term. Okay? Because at the end of the day, we know that wealthy people don't buy term. The Rockefellers didn't buy term policy. McDonald's is still around today because when he was going through a position where they wasn't going to give him any more loans, he tapped into his cash value whole life policy. That's how McDonald's still allowed today. Okay? What Disney World is still around today because of the cash value policy that he pulled out to be able to pay employees and everything else. So wealthy people don't buy term. You understand? So at the end of the day, ask questions. Don't just let them tell you. And again, I'm not against, if you buy term, yes, you better be investing in something. If you buy a term policy, you better be investing in something, because you are gambling with your family's livelihood. You are gambling with the future of your family if you're buying term and you're not truly investing. The reason why I love the concept of the cash value permanent policy is, worst case scenario, the policy will be there for my family. Okay? Because I could want to invest all day if I want to. If the market crash and I lose everything, then what? Okay? The money that I invest, if I end up having to use it because of some health condition, or let's say I use it to live off of, then what am I leaving my family when I'm no longer here? So the permanent policy concept in my mind makes sense, because worst case scenario, my family will get this. But with the term scenario, we know that's not going to happen. So you better have a solid retirement plan. You better have a solid, and this is why I say it's unrealistic. That concept is saying everything aligns in perfect condition. It's not going to happen. Mr. No Cash Value, I don't know how long you've been an agent, but if you were around in 2008, you saw people lose 30 or 40% of their value in their portfolio. So I don't know how old you are. I don't know how long you've been around in business, but I've been around since 2008. I saw it happen. It happened to me. Before I got into the industry, my 401k was $138,000. When the market crashed and they lay off people and stuff like that, I said, you know what? I don't want to do what I'm doing anymore. I went to human resource. Hey, I wanna, pretty much, walk away. My 401k, can you please hand it over to me? They said, well, okay, you gotta pay taxes on this. You gotta pay taxes. I'm like, hold on. What? You understand? And this is after I lost almost 40 G's in the market. It went from 138 to like $93,000 from 2008 to 2009. So what I'm saying is this, like, what you guys are offering people is a perfect condition for 30 or 40 years. It's impossible. It's impossible. This is the reason why wealthy people have life insurance as a backup. Because they know it's impossible. And especially when the average income in America is $67,000 to $68,000, most people are not going to have that kind of money to invest extremely well. Most of the heavy savers and investors, even people who are making $100,000 a year, can't even invest or save like that anymore, because $100,000 is not $100,000 anymore. So if you're not making $150,000, $200,000 a year, then I know for sure you're not maxing out your 401k. I know for sure you're not maxing out your potential for an IRA or Roth IRA, because your income is just too low. So if you're still there, Mr. No Cash Value, again, I don't know how old you are. I don't know when you got into the industry, right? But I'm telling you right now, I've seen it. I've sat down with clients who have lost $200,000, almost $300,000 in their portfolio, on the verge of retiring 5 years. And they have to stay working. Some people are just now recovering from 2008. So that concept. And listen, Mr. No Cash Value, hey, listen, DM me, or let me give you my number. 443-208-5480. That's 443-208-5480. Let's talk. Listen, I don't want to recruit you, but I want to educate you, because I don't believe your organization or what you guys are doing, I don't believe it's actually helping middle America. I'm just sorry. I can't see it. The numbers doesn't say it. If the average retirement savings right now was like $500,000, I say, okay, you know what? I agree with you guys. Maybe I can see that. But the numbers is saying the average retirement saving right now is $183,000. Nobody can retire off of that. So if you're watching this, just understand that your term policy is not permanent, and you're playing a very risky game, because most people, in most cases, 65% of the people, health is going to change from age 20 to age 60. Between the age of 40 and 60, most people's health is going to change dramatically. So if you buy a term policy at 30 years old and they expire at 60, and you're not willing to pay the new premium, now you have to reapply for a new coverage with your health condition, with your new age, with your weight, right? I'm gonna give an example, and I don't know why I didn't mention this earlier. I would have got a term policy 10 years ago. 10 years ago, he was 205, 2 something, somewhere around there, right? I sat down with him because his term policy was about to expire. He's now also 60, right? He has 2 properties that still has outstanding mortgage on, and a wife. He wanted to do a new term policy for this time 20 years, right? And because now he's 70 pounds overweight, he's very unhappy with the new premium. And now say, remember when I talked to you about converting over to a permanent policy? And you said, oh no, you know, you're going to pay the house off in 10 or 15 years. And now it's 10 years later, you're nowhere close to paying the house off. He said, yeah, I remember that conversation. I said, this is what I mean. And then I said, hey, listen, instead of going into another term policy, why won't you consider a permanent policy? And that's what we're looking at now. Because you went from being a little bit younger, 10 years younger, to being fit, okay? 6 feet, 205, to now 60 years old, 6 feet, 283. Right? These are conditions that happens to a lot of people that people don't consider when they buy these policies. And again, I'm not against term. I got clients who I'm not going to shove anything down a client's throat. Whatever their needs are is what I'm going to give them. But I will say, when you get that letter in the mail from the insurance company about your new, you know, your renewal, I don't want you to say I didn't tell you. Okay? But I will give you what you want. So my beef right now is with agents who get on here and they have a lot to say about cash value policy. I have an issue with that. If you love term, sell term and call it a day. If people want to get cash value policy because they want to leave a legacy to their family, they want to leave a substantial amount of money. Most Americans are not going to be able to leave a substantial amount of money to their family unless it's life insurance involved. They're just not. They're not going to save that. They're not going to save that amount of money. They're just not. What's substantial? It depends on the family. I'm not sure what kind of question that is. If you're an individual and you have a wife and 3 kids and maybe 5 grandkids that you love, here's my thing. Life insurance to me, I don't even call it life insurance, really. I call it love insurance. I call it love insurance. Because if the intention is to leave and 150K. Okay, no problem. I don't know how long 150K will last your wife, 3 kids, grandkids, and we know this for a fact that most people die still owing a mortgage balance. Most people die still owing a mortgage balance. So why would you not want to leave substantial amount of money? Even if you have $500,000 in your IRA, why would you want your wife to tap that out to pay a mortgage off? That doesn't make sense. The life insurance comes in to clear all those bills, and your wife can keep the IRA or the 401k to live off of. Listen, I want you guys to think about this. I want you guys to think about this logically. 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 If if I buy a term for 30 years, after 30 years it goes away, and I save $500,000 in my IRA. Okay? The question I keep asking these guys is that $500,000 for me, or is that $500,000 supposed to go to my family and I just set it to the side? Because I'm thinking in most cases, he's probably going to use that money to live off of. And if this person now at 65 lives to 85, there's a high probability there's no wealth transfer. There's a high probability. It doesn't go away. Where does it go? Because the client is not going to pay as a matter of fact, Coach done right. I need you to ask me. Let me ask you a favor, and pull out one of you guys' policy if you can. If a person buys a 30-year policy, it's $500,000. They was paying, let's say, $80 a month. How much is the new premium going to be at the 31st year, and the 32nd year, and the 33rd year? It becomes, all term policies are the same. I don't care what company that you're with. They become annually renewable. Nobody's going to pay that price. I've been around long enough to sit down with clients. No, I'm not bringing you guys up. I had enough of you guys last week. I've sat down with enough clients that have gotten letters from the insurance company asking them to contact their agent to go over their new renewals. Yeah, that's why you're not coming up. Ain't no cooking here. Cook on your site. Cook on your live. Right? So if you're watching, if you have these people as an agent, I'm not saying don't work with them. I'm saying get a second opinion. I'm saying talk to multiple agents. Make some phone calls. As a matter of fact, when they leave your house, call the insurance company that they work for and say, hey, this agent sold me this 30-year policy. What happens after 30 years? If their plan doesn't work out? I absolutely don't have a problem with my client calling the insurance company. I don't care. Because there's nothing I'm selling them. Whatever I say to them is what they're going to hear from the insurance company. This is why my retention number is so high. This year alone, I don't believe I've had any cancellation. Less than 5% of my client cancel or walk away. It really happens. It really happens. Because whatever they choose, because whatever I put in place for them is their choosing. I will educate them. That the first 30 minutes of the appointment is education. Term, whole life, high UL. This is what this does. This is what this does. This is what this does. This is the price for this. This is the price for this. This is the price for this. What do you want, Mr. or Mrs. Client? But again, you guys work for one company and you shoving that down their throat. Term, everybody. Oh, you make 80 grand? Term. Oh, you make 50? Term. Oh, you make a million? Term. Oh, you got no wife? Term. Oh, you got wife? Term. Oh, you got no kids? Term. Everybody term. Come on, guy. Come on, guy. Come on, man. Nah. We don't do that. We don't do that. That's like you going to Toyota and they shoving everybody in Corolla. They're shoving everybody in Corolla. Oh, you 5'2", Corolla. Oh, you 6'8", Corolla. Oh, you 280, Corolla. Oh, you 120, Corolla. Come on, guy. Nah. This is not about cooking anybody, sir. This is about educating your client. This is about educating your client. Okay? Most of my clients that have IUL with me still invest in their 401k. I got an IUL, and I also got an IRA, and I also have a deferred account plan. I got stock option plans. The purpose for the IUL for me is a permanent policy. I carry 1.8 million. I know that worst case scenario, if my plan doesn't work out for me the way I planned it, I could plan all day if I want to. God make the decision at the end of the day. So at the end of the day, the insurance is the buffer for my family. If my plan doesn't work out, this right here is guaranteed that's going to work out for my family. Okay? So, but you guys who get on here and everybody term this, term that, your 280 term, your 120 term, your married term, your single term, no kids term, multiple kids term, don't own a home term, own a home term. Come on, man. Come on. Come on. Come on. So you got the wrong IUL guy. Yeah, okay, no problem, sir. No problem, sir. Hey, listen, let me tell you this. Last week, we're actually working with a gentleman on a construction company, 4 of them. He's had his policy since it's a whole life. He's had it for over 30 plus years. So the gentleman is like 68 years old right now, right? With what was $1.5 million cash in there. We're working on that case right now. So what do you mean it's not guaranteed? The guy hasn't made a premium payment in 5 years. He didn't need to. He got significant amount of cash value in there. The reason why we're working with him now, because he wants more coverage. He wants more coverage. Yes, a whole life. That's what he had 30 plus years ago. Yes. I know what I said. Okay? So if you're watching this and you're a client, you're looking for insurance, and you run across somebody who's only offering you one thing, you might want to hold off and call and make some other phone calls. If they're not giving you options and they come in there and telling you should buy term, and you asking them why, and they're going to tell you, oh, they, and again, to me, logically speaking, would you rather pay for a term policy with the likelihood of knowing that you're giving the insurance company free money, because if you outlive it, you get nothing back? Or I do a permanent policy knowing that no matter what, they're going to pay my family? Which one would you rather do? And ultimately, at the end of the day, like I said, it's up to the client. Let them pick, let them decide. But my gripe is with you guys. I've been coming across you guys live for the past week, and you guys have so many negative things to say about the IUL, which I don't understand. It's almost like you got you get on here and you scare people about the IUL. I'm starting to think that you probably don't have your own clients, and you want to steal other people's clients by scaring them to death. That's really how I feel about it. But you know for sure that after that term runs out, because I've sat down with so many of the clients, convert them over to a new policy, because what they don't show the client with the term policy is what happens after that term time frame is over and what that new premium looks like. And in most cases, you guys are gambling with the client's life. you're telling the client they should buy term and invest the difference. But what if that investment doesn't work out? Again, we saw what happened in 2000. We saw what happened in 2008. You understand? So far, America have experienced about 3 crashes so far in my lifetime, at least. At least. A lot of people have lost a lot of money in their investment plan. So how can you solely tell people to just buy term and invest the difference and they shouldn't need term anymore because they'll be self-insured? Which to me, when I hear that, it doesn't make any sense, because especially when I hear millionaires have life insurance. So if you're telling people buy term and then after a certain time they should be self-insured, they don't need term anymore. But then I hear millionaires buy term and have term policies. Because millionaires understand a couple of things. The more the merrier. Millionaires also know that I don't want my family using the money that I've saved up for investment to pay off properties, to pay off taxes. No, that's not what your IRA is for. That's the fastest way to deplete your IRA. The life insurance is supposed to do that. And this is the reason why millionaires will always carry life insurance until they die. Because the life insurance money will come in and pay off all debts owed, will pay off taxes, will pay off properties. And then the investment is what the family can eat off of. Listen, again, guys, if this is your first time coming across my platform, I want you to follow me, because I bring a lot of knowledge about this industry. I'm call me Mr. Education Guy, because that's all I'm about, is educating people and let you make your own decision. I want you to follow me. I want you to also hit me with a like if you got value out of what you heard today, right? And I want you to share this with other people who may need to hear this. And last but not least, if you 48% of the people in the country right now don't have life insurance. Children are also amongst that 48%. If you've been looking for life insurance but you don't know who to trust or you don't know where to go, DM me, message me, or let me give my number directly: 443-208-5480. That's 443-208-5480. I work best with text messages, and I can get with you and go over some scenarios and see what work best and fit you and your family. But there's no reason why you shouldn't have life insurance. Life insurance right now is so inexpensive. It's so cheap. There's no reason why you shouldn't have life insurance, right? And I guess these gentlemen have they ran off, I guess. Listen, I'm gonna wrap this up. I want to jump on here and have a conversation, because again, I've been seeing a lot of these guys just going off on social media, which is just disturbing. To me, I just think they have too much time on their hand, which means they're not serving clients. If you're gonna get on here every single day, 2 or 3 times a day, talking about how the permanent policy or the cash value policy, doesn't, is bad and blah, 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 and should buy term and stuff like that. So, but again, if you are dealing with these gentlemen or ladies, that's forcing you to buy these term policies, yeah, you might want to pause on that and seek a second opinion And even the policy that they offer you, this term policy from their company, is the highest in the industry. Like I've literally sat down with a few of their customers and gotten them double the coverage for what they was paying. So listen, hey, hope you guys have a wonderful and blessed rest of your day. Thank you for joining the live again. If you are looking for life insurance, hey, listen, text me or DM me, and I'll get back to you as soon as I possibly can. Have a good one.